How can you maximize the multiplicity of investment opportunities that arrive each and every day? Direxion Investments has a broad suite of highly liquid, institutional-style alternative investment strategies. From leveraged ETFs to index-based alternative mutual funds, Direxion has strategies that help investors to manage risk-adjusted performance through evolving market conditions. We're pleased to have with us Andy O'Rourke. He's the managing director at Direxion Investments. They've got $8.3 billion of assets under management. DirexionInvestments.com is the website. Andy, great to have you with us. Welcome to the Index Investing Show.
Thanks very much, Ron. It's great to be here.
An important investment strategy or trend that is still unfolding and getting bigger every single day is something called strategic beta. How do you define strategic beta, and do you think that more investors ought to be incorporating strategic beta into their plan?
Yeah, sure, Ron. Thanks for the question. Yeah, and in fact, even the names that we are choosing for this particular category are evolving. Some are referring to this as smart beta. We like the term strategic beta because it focuses on the strategies within them. Other people refer to them as factor-based ETFs. But whatever you call them, essentially what we're talking about here are ETFs that are based on and tracking rules-based indexes. So instead of it being an index that in the traditional index that is just looking to track the performance of a particular asset class or country sector or what have you, no matter what it does, these particular indexes are seeking some sort of a result or some sort of an outcome, whether it be seeking to achieve some alpha or risk diversification, income, that sort of thing. They are actually looking to perform based on, like I say, these rules-based indexes that are being created.
Andy O'Rourke, Managing Director of Direxion Investments, joining us. Now, you kind of alluded to some of the strategic beta or alpha-seeking strategies there. So my next question is, what does Direxion Investments offer in this regard? What type of funds do you have tracking these strategies?
Yeah, we have a handful of funds here. You mentioned alpha-seeking. One of the ones that we're looking at there is a fund that we refer to as the Direxion All Cap Insider Sentiment Shares. So this is an ETF that's tracking a strategy that, again, is baked into an index, a series of rules that is trying to identify the buying sentiment of corporate insiders. So if you think about, the higher-ups at companies, what they're actually required to do is when they're trading their own company's stock on the secondary market, they're required to disclose that to the SEC. So that we're able to create an index that looks at these disclosures and identify which of those corporate insiders are buying significant amounts of their company's stock. And the idea there is if they're doing it, they're kind of in the know, hence the ticker. Well, the ticker for this particular fund is KNOW. Then we see that as a particularly good sign, and that's the basis for isolating the stocks that are selected within the ETF. And in addition to that, we also look at analysts' ratings on these stocks and come up with weightings for 100 stocks to make up the particular index.
I was doing some research and came across the iBillionaire Index, which also aims to generate alpha or market-beating returns. So just tell us a little bit more about the iBillionaire Index. How does it work?
Yeah, the index is interesting, and for full disclosure, we have filed with the SEC to create an index. To create an ETF that tracks this rules-based index. Not a whole lot I can say about the fund at this point, but I can tell you the general concept of that index is a little bit similar to what I described with our KNOW fund, but instead it's looking at the trading activities of financial billionaires. So billionaires that are focused in the financial sector, like maybe a Warren Buffett, for example. And then takes a look at their buying activities and then has a whole host of methodology around trying to select those stocks based on their weightings and their performance to identify holdings within the index, and it, as you say, it seeks alpha. It tries to outperform the broader market as measured, say, by the S&P 500.
If you're just joining us, you're listening to the Index Investing Show. Pleased to have with us Andy O'Rourke. He's the managing director at Direxion Investments. Go there, direxioninvestments.com. Now, I want to talk a little bit about the S&P 500 Volatility Index, also known as the VIX, which recently hit 52-week lows. And although there hasn't been much stock market volatility, we know that it will definitely return eventually. But instead of scrambling to limit volatility when it finally hits, savvy investors prepare ahead. And the Direxion S&P 500 Index Volatility Response Shares, as ticker symbol VSPY, takes really a unique approach to limiting the impact of higher volatility. Tell us more.
Yeah, that's right. In fact, the idea behind this particular fund is recognizing the fact that volatility is present often within the equity markets. It can come and come out of nowhere at any point in time. So what you want to do is to be able to react to that appropriately, in the general sense that volatility can be particularly damaging to an equity portfolio, and in fact, oftentimes volatility is a precursor for a bear market. So the particular fund that we've launched, the VSPY, strives to look for the opportunity to be protective at times when volatility rises. So the very simple concept here, the index for the fund looks at volatility levels, and essentially you can think about it this way: if volatility levels, as measured by standard deviation in the market, is at 15 or below, you're basically investing in an S&P 500 index fund. If it's above that, the fund will formulaically pull back away from the S&P 500 and invest portion of the portfolio into treasuries as a way to be defensive when volatility is rising, and will adjust accordingly based on those volatility levels.
Yeah, and that's a great way for people. There's constantly that emotional battle that investors have, and they don't have to play that game with trying to decide, well, do I invest in stocks or do I go to cash? This is like you had mentioned earlier, going off the theme of rules-based investing, very systematic, very disciplined way to be invested in the market. Again, that's right. Ticker symbol VSPY. Andy O'Rourke at Direxion Investments joining us, direxioninvestments.com. U.S. short-term interest rates have been stuck near 0% for a while, and there's a lot of smart people, Andy, that believe rates will remain low at least for a few more years. Income investors have been looking at higher-yielding sectors like master limited partnerships, also known as MLPs. We've got the Direxion Zacks MLP High Income Shares ETF, that's ticker symbol ZMLP, which targets this particular high-yielding sector. Talk about this particular fund.
Yeah, that's right. And again, still with the same theme here, we're building a rules-based index that, in this case, is its goal is to seek an outcome of higher income, something that people are really working hard to find these days. And as you mentioned, definitely some opportunity for that within the MLP space. And so we built that into an ETF structure, which is a C corporation structure. So it gives people access to this asset class that sometimes they aren't able to get in that particular structure. It means they don't have to deal with cumbersome K-1 tax filings. Gives them the typical liquidity and transparency, so you know what you own within the ETF structure, and it has done a very nice job since it's launched, producing a good level of income.
Andy O'Rourke with Direxion Investments is with us, direxioninvestments.com. That's DIREXION investments.com. Andy, going back to 1974, there have been 7 bull market rallies in the S&P 500 of 20% or more without a 20% correction. And although the current run in the S&P 500 from March 2009 lows has been long and impressive, it still doesn't match the 228% gain from 1982 to 1987, or that marvelous 582% gain from 1987 all the way to 2000. Now, Direxion has two ETFs to play the long and the short side of the S&P 500 trade. Tell us more.
Yeah, that's right. It's actually, in fact, as of recently, we have three, because what we offer at this point are leveraged access to the S&P 500 in both a bull 3 times leverage fund as well as a bear going inverse 3 times leverage fund, and more recently we've also just launched a bull 2 times leverage fund. And the idea here is with a leverage product, if you're looking to be efficient with your use of capital but get magnified exposure to those particular asset classes, either in a bull or a bear direction, you're able to do that. So lots of different ways you can get exposure to the S&P 500. You can buy a non-leveraged fund. Let's say you were trying to get $100,000 worth of exposure to the S&P 500. You could do it with $100,000 in SPY. You could do it with $50,000 in our 2X bull ETF, or you could do it with about $33,000 in our 3X ETF. All the exposure is the same, therefore all the risk is the same, but you're using your capital a little bit differently and freeing up some to maybe invest in other types of asset classes to diversify your portfolio a little bit more. The one thing I do want to mention, though, as we talk about leveraged funds, is that these are truly meant for short-term trading situations. Those that use them are knowledgeable about how leveraged funds work. They need to be. And they are monitoring them very closely. So we definitely recommend that. They can be very useful tools, particularly in the scenarios like you're mentioning. I think a lot of people are wondering when this rally might end. Using a hedge with a bear version of this fund may help protect you as you determine whether this is a one-day turnaround or a more systematic turnaround in the markets.
Right. And those ticker symbols again, SPXL, SPUU, and then SPXS. And again, those are the leveraged S&P 500 ETFs. And of course, the benefit there, as Andy mentioned, not having to go or use margin to buy into some of these funds. You can use a lot less capital and still get the leverage exposure that you're looking for to the S&P 500. Great ideas and great interview. Andy, thanks again for taking the time to be with us.
My pleasure. Thanks for having me. I really appreciate it.
Andy O'Rourke, Managing Director at DireXionInvestments.com. I'm Ron DeLegge. You're listening to the Index Investing Show, and I'll be right back after this break. Go nowhere!
The Index Investing Show with Ron DeLegge.